Hello, this is Dave, and welcome to Equities Story. I'm with the Wolf, and this is obviously just a general share advice. And we're going to go quite quickly because we are live in an hour and a half, and we look forward to that.
You can't go quickly, Dave. That's not your word. Quickly.
I'll tell you what, I don't want to go quickly today, Wolf, because you know what, we had a big winner. So
can we just bask in the glory of one winner?
Yeah. So PTB, which was one of the dividend plays early. I mean, it's generally speaking, it's held trend really well, and a really good takeover offer today, up 35%. Solid takeover offer, Wolf. You know, it's now at $1.56. Are you taking profits today?
Yeah. Look, any takeover offers like this, you'd go, yeah, take it.
All right.
It'd be probably very happy. I mean, you've got to be happy with that sort of price performance. So hopefully there's a few members out there who bought this as a dividend play, and what a bonus this is, right? I mean, we're all in here for the dividends, and someone's come in and bought it. But you know, the reason why we put these things on is because there were value and dividends. So there was that slight possibility that someone might go, I like this business, I'm going to buy it. There you go.
Okay, Wolf. So that's gone. Let's talk about the next one, right?
Yep. All right.
So let's talk about PFG. Go on. Let's talk about PFG. So they're growing their revenue. They're growing their earnings. They're lifting their dividend from 4.5 to around 7.5, if that's correct. They're currently trading on a PE of 11. Very interesting. Again, there's risk because we know it's a small cap. It's slightly traded. Looking very similar to the PTB type story. But there's a lot to like about this one, although it is a micro cap, and micro caps we know can be risky. It's paying a nice dividend. It seems to be undervalued compared to its peers like KPG. KPG is trading at 47 times. These guys are trading at 11. 10. Sorry, we redid the numbers, about 10. And they're looking for growth next year, Wolf. So as a dividend play, recurring, a lot of it is recurring because they're doing self-managed super funds. Very you're liking this from a lot of angles. You're liking it, aren't you?
Let me take that stuff I don't like first. You should get a little and then we'll go through that stuff I like. So it's in a crowded space. You know, this self-wealth management, whatever. There's a lot of players out there. You know, they've listed their peers, and there's a lot of them. So
sure.
You know, it doesn't have a moat. It's not a leading company in this space. So it's just a small little player trying to make their way, right?
As you do.
Yeah, as you do. So, you know, from that point of view, boring, yeah, you know, nothing really exciting. However, let's talk about the good stuff. So it's a small player, very cheap. So there's value there, growing nicely. That's a bonus. Dividends, beautiful. So really, we're going to classify this as a dividend plus a little bit of growth. They gave the FY23 numbers outlook. And if you take that outlook at face value, and if they can hit the target date, they're going to lift the dividend by almost 40%, right? That's what they said in the presentation today, that we want to lift the FY23 dividends by 40%. That is excellent. I mean, already it's a pretty big dividend already. So that's going to be nice. They're going to grow, I think, 50% revenue. They want to, right, in FY23. And I think EPS by about, I think, 10 of what I saw today. So if they hit those numbers, this is value. This could also have that a little bit of attached M&A possibility to it at a later stage. So yeah, you know, you got to like it from that point of view. So there's definitely much more positivity than negativity. Is it for everyone? No. But for the ones looking for a dividend, boring little stock that can give you that, you know, nice little return, there you go. You can maybe take your profits on PTB and get into this instead.
Wolf, yeah, it's certainly very interesting. So thank you very much for that, Wolf. So congratulations, obviously, people who help PTB, done well. Have a look at PFG.
Okay.
Now let's talk about another P. It's all P's today. PWH.
Yes.
You know, sort of, I was a bit sort of curious about this one, Wolf, because it's so expensive. I put it on Einstein's when it broke out. I thought, well, it's breaking out. Will it really go on with it? Because it is expensive. And it has gone on with it. It's gone on really well. I mean, except what it's got is a little bit of an exhaustion pattern here. and it's not far off resistance. It's expensive. I think the market's coming down. I'd be taking technically, I'm not going to, I'll let you give the fundamental view. Technically, I'm taking profits here, Wolf.
All right, I'm probably going to ask your help here, right? Because I am conflicted here. I love the story. They come up with a pretty good result. So for me, it's something you want to own, but the question is at what price, right? So when I look at the figures, it's all looking growth-wise, outlook-wise, all pretty nice.
Yeah.
It's trading on 40 times though. So the question for you and for everyone else out there, what is the market prepared to pay for a company like this? At the moment, it looks like they're happy to pay 40 times, but in a market like this, is this going to come back again, back to that, say $8 mark again, right? So
the revenue growth was very good, wasn't it? Yes, 28%. That's excellent. I mean, yes, well, I suppose the question I've got to ask you, what's the sort of outlook for growth next year?
I'd say very similar, Dave. I mean, this is the thing. This is the beautiful business. I talked about it many times before. Long-term growth here is beautiful. That's why I love this story. We had to sell it off during the sell-off when the whole market really collapsed. Now it's come back, but it's come back so hard that it's come back to the levels that we sold it at or even further. So what do you do in this case? Because I want to get back in the story. Where do you see it coming back? So,
well,
I don't think market was to pay anything less than 30 because I don't think it's going to get there, right? I don't think we're going to get this in the 20s unless the actual fundamentals collapse. So I'm thinking the market maybe could come back into the 30 somewhere. PE. This is what I'm talking about. So, Dave, technically wise, how cheeky can we be with this? Where can you see it coming back to?
Well, you've got to take a position on the markets in the world where they're going.
Okay.
And I'm sticking to the view, obviously, September, everything's going to come off. And I think the market's going to come off hard this year. And I think it's going to go lower than it's been for a lot. And if that happened, I mean, what, I'm not saying it's going to go down to, because what happens when you get these big falls, the market tends to look at 6 and think, oh, you had support there, and it tends to turn a little bit before that. But I still think you're going to be able to buy this at a cheaper rate, because if you start getting recessions around the world, people won't be factoring 28% growth for PWH. They'll be factoring lower growth, and you can see it fall. So, like I said, I think this market and these sort of stories, it doesn't really pay a dividend worth looking at. For me, it's don't be. I think what you said to me. You said this to me, Wolf. It's from you. You said, Dave, you can't be greedy in this market, right? And I 100% agree with you. And for that reason, listen, you could, if you're doing really well, you could put a tight little stop if you want it under that $9, right? I've got no problem with that. Okay. You could put a nice little tight stop at 8.98 or take a profit now, whichever you want.
But if you don't have it, and you want to get into this,
well, you wouldn't buy.
Where do you see it? Where would you be? Look.
You know what? I'd be looking after the fall, after the market's had a correction.
But can you go into your little crystal ball and say, where do you think the market is probably going to start buying it up again? Can you see
the market's buying it now, Wolf.
I know, but say the market goes negative again, right? And it does a similar fall.
Well, I think really
$6, or do you see it maybe come back to $7 on the back of these
I think so. I think around these sort of levels, I think the clever money will start nibbling away again, won't it?
Okay. All right.
All the long-term money, right? Not the short-term.
7 and 8, somewhere there.
Yeah.
Okay. All right. Fair enough.
But I'll tell you what, it's tremendous performance today.
Oh yeah, I'm. This is probably one that's really got away. Should have been buying when that had a big jump. Yeah. So within the next couple of green candles, that's when we should be buying. There was, big. The thing is, evaluation stopped us, unfortunately. But there you go. Darlings of the field, they've always have a way.
You know what? I think it's fascinating because you tend to find stocks with really heavy P's get really sold off when interest rates are going up, because the market tends to start valuing at different metrics.
Yep.
And you've seen that across the board. What's interesting about this story is the market are really, really liking the growth and the potential of the company. And that's interesting. That's just interesting that it's one of these few stories. It's saying, right, I'm going to value on older metrics before the big
amazing, isn't it? Because every story is different. Yeah, absolutely.
Yeah. It's interesting. Right. Anyway, next one off the cab is Cochlear.
Yep.
Just sideways, Wolf. I don't think it gives much of a dividend. Like you said, little growth. I think it's
Yeah.
You wouldn't be interested in it if you're in
If
it.
it was trading at 10 times, you'd go, okay, I might have a look at it, but it's still at 50 times. And for God's sake, with what, single digit growth 50 times? No.
It makes PWH look a steal, doesn't it?
Exactly.
All right, FPH.
Mm-hmm.
Again, sort of interesting announcement, and the reason I thought it's quite interesting, this is a story that was sort of marching on fairly, and we can have a bit of, you can draw a little trend line in here, Wolf, if you want, and just to give you I'll give you an idea. So this is a stock that was sort of marching on quite nicely. Maybe that trend line's a little bit lower. One day, draw your trend lines properly.
Oh my God! Now
anyway, so it doesn't matter, but you get the idea. So this is a story that basically they said we had a fantastic run up thanks to COVID. It had that big bump up, but we're sort of marching at a higher revenue growth than we were back in 2019. So really, if you put it on a long-term trend, it's sort of humming around this sort of level, isn't it? And possibly, like you said, it looks like that candle is going lower. Maybe it's a value wise, it's a $16, $15 stock.
I think the market's saying of today's update, they're not confident with the next 12 months. And you got to take that warning, and you say, okay, well, I don't think I want to be at this stage in here. Wait until maybe I see another 6 months worth of data before I look at this again, which is fair enough. I mean, the pandemic really, it's like a tale of two halves: pre-pandemic, pandemic, and post-pandemic, right? So the pandemic was obviously an extraordinary time for companies like FPH. So you really have to just almost cut that out and say, let's get rid of that period of 2 years.
Well, yeah. Also, Wolf, you could argue that it can be really difficult for a business that's experienced that really strong growth, and they've maybe pulled on more staff and they've geared up, and suddenly
that's why it would be a little bit.
Yeah, and suddenly that's gone overnight, and you've got too many staff, and you've done stuff to handle the pandemic.
Produced.
Yeah, it could be messy for a year.
Yeah, that's okay. Well, better to stay out for the moment.
Anyway, okay. Anyways, it's below trend anyway. CWY, Wolf, they're doing a capital raise. Talk us about this one.
So they're buying a company out of I think New South Wales, raising a 300 million odd, I think, from what I saw, and the results were actually not great. So for me, right now, too expensive. I like the story of CWY. It's pretty defensive because it is a collection of waste, recycling, and stuff like so. It resonates with me, right? I know this is going to be growing over the next few years, but they're just going through a messy period at the moment again. So for me, no.
AGL, Wolf, poor announcement, and you know what? It looks like if it's below. Let me give you, below it, this is a sell. I don't think it's going to recover by the end of the day. Charts say get out of Dodge.
Dave, I've been telling you this is a false move up. How many times have I said that this is a false move up? This is moving up on the back of M&A activity, not on its fundamentals. And I said, do not fall for the trap. Here you go again. The proof is in the pudding. The results are not great.
Yeah, could it still happen, the M&A?
Yeah, of course, but
but you don't want to buy for that, do you?
You don't want to count on that. This is not how you're supposed to be investing.
Yeah.
So.
And the little excitement that the story had from here to there.
I mean, can you imagine the people that are just looking at those results going, "Oh, no, thanks. We're going to pull out of this M&A activity."
Yeah. Anyway, listen, it's a sell. It's below 785, so sell it, right? TPG.
That's another sell.
That's another sell, isn't it? Look at that, nicely moving up. Everyone's thought it was going to be quite good. That's one that I'll tell you what, hats off to the company, keeping things out, not letting the story out there.
Yeah, well, if anyone lets anything out, they'll be shot on the spot.
Now let's talk about SGP. SGP, pretty good dividend, Wolf. It's below trend. It does look, in all fairness, that it's trending down slowly. And it's got like a little sell signal, which I don't like. So I think it's at least going back to that 350 level. Would this be on your list of dividend stocks or potential dividend stocks that
No,
someone could buy?
the thing is, there are so many in this space, right? The REIT space has got a dozen of these companies.
So this is on a P at the moment of 5.5, and a dividend. I just check your Reuters to make sure this is correct, but it says a dividend of 6.8.
I think we need to just take that the PEs of the REITs can fluctuate greatly, right?
Yeah.
Because from what year to year, they have write-downs, they have one-offs, significant items. So it's not a true reflection. I think we just need to take them a little bit differently and just, it looks cheap, yes, and they have to report the way they do and so on. So it looks cheap, but I think it's more about the environment they're in, the dividend they pay, and are you happy with that, right? I mean, that's the bottom line right now. 3 questions you've got to ask yourself. Do I like the space right now? No. Do I maybe happy with the dividends? Yeah, I am. So you could make a case for one stock to be in your dividend portfolio. Whatever you choose, you've got HGP, you've got those Charter halls that we looked at previously many times over. You've got HPA, the whole property. There's so many to choose from, right? So you've got definitely a choice out there. Go for it, right? If you can definitely have one in there, but for me, you should not be overexposed. This is all I'm just saying, because you've got not a conducive market to great performance right now for these companies.
Wolf, they say that NTA is $4.31. It's trading at 3.76. That NTA would be most probably on recent valuations, which you could argue might be a little bit heavy since the market's gone down a little bit, right? So, but they seem pretty strong with their rentals at 99.7%. Just having a look.
Yep.
Their profit was up 25%, but that's most probably obviously from the COVID lockdown. So
that's right. You've still got that COVID performance for them, right? Which that we had a still pretty good real estate market back then, but over the last maybe 3 to 6 months, it's been slowing down, right? So the rental market is very strong. So they might have positivity in there. So it's a quality company. Let's put this straight up.
And they have lifted their dividend here. They said up 8.1% on FY21.
So like I said, you can definitely have one of these as your main, one of your REITs dividend plays in your portfolio.
So I suppose the argument is, if you're in it, if you've got some, would you and it's a dividend, you don't see anything reason why you'd sell it.
No, I wouldn't. I mean, like I said, if it's trades within that, I think 350 to 450 range, I'm happy to hold.
All right. Now, Wolf, I think lastly, but not least, Newcrest.
Yep.
Gold's been, it's really sort of, it's threatens to get going, and it keeps going back into second gear or first gear. And this doesn't look obviously appealing to buy at the moment. We do quite like the gold story. I think eventually in this world we're in at the moment, it will kick off. But again, I mean, if you're going to get a gold story, you're going to look for one with the costs of production are very, very good, aren't they?
Yeah, even though they jumped up a little bit over the year, right? You expect that. I mean, there's cost inflation everywhere. So they're not going to be immune. They're not God. So yeah, but it's still better than everyone else out there that we've seen in Australia, right? So it is one of the cheapest gold producers in Australia.
I think they're up about $100 an ounce, which it's not bad. And this inflation out there, it's not bad at all, is it?
Yeah, and I think if you're going to be buying NCM, and we've always said that you're buying it for the long term because of the growth that they've laid out for themselves, right? This is what you're looking at, because if you want to buy anything in that mineral space or the commodity space, you want to have a production profile that's actually going up. If it's just stagnant, you're going to get no growth at all. So you want to find something that's got production profile growth, and this is what is showing us. It's going to have production growth.
All right, Wolf, I think that's everything today. So thank you very much for that. We have got a buy today, and I've got to sort of make a warning on this buy. It is very lightly traded. So obviously we don't want everyone just going to buy it, just be sensible. I think we just sort of put a cap, don't buy it under that sort of maybe 0.22, and just be patient. If you don't get it this week, or hopefully you get it next week, or you might get it just when the market has, and again, even stocks like this, when the market starts having a bit of a sell-off, it could easily come back to 18 cents. So just don't get all too overexcited, because me and Wolf tend to get excited about stories because that's what we do. It's our passion, it's our love. But what you find is that the market come back a bit, you'll be able to buy this at a more.
Don't wait 2 months because they're really the fund wants to buy probably some as well. We'll just have to wait. We have to wait for you guys to get in first.
Okay, that's very, very good, Wolf. And it's not far. All right. On that note, Wolfie, thank you so much.
Join us for the Friday midday show, please. We're going to talk. I'm going to give you a little bit of preview. I'm going to talk about CMP and TLX. I did a little bit of reading yesterday about them.
Thanks, Wolf. All right. Thank you, everyone. Bye-bye.
Cheers.